Hello, and welcome back to France Made Simple, the podcast where I demystify, debunk, and generally try and enlighten you all about life in France. Now, the last episode, I think it was the last episode I did about completing French tax returns, generated a lot of feedback and a lot of comments because it is something that people do tend to, I would have to say, get their knickers in a twist about and generally panic. But fear not, on the back of that, I'm very delighted to inform you that this morning I'm joined by Paul Robson, who is here to talk about UK and French tax returns and explain in layman's terms exactly what we all need to do. So thank you very much for joining us, Paul, and hello.
Good morning, Kat. It's good to talk to you, and thank you for inviting me on the podcast.
Not at all. It's a pleasure. And before we get into the, I would have to say, more boring stuff about taxes, I just have to tell the listeners that I just had a quick look at where you're located because you're not a million miles away from me. And your nearest town has got a very French name, has it not?
Yeah, I was going to say we're near Domfront. We're also near Camembert. So if you want some cheese, we're pretty good for cheese.
Yeah, I didn't. Well, I mean, I know it sounds stupid, but it never even crossed my mind that there would actually be a place called Camembert. So, you know, that's just so French. It's quite made my Tuesday, actually.
Well, I enjoy the cheese. Let's put it that way. Probably too much if you listen to my doctor.
Yeah, no, me too. We're on a cheese restricted diet in this household currently. We're limiting ourselves to it at the weekends.
Ooh,
I think
that's
we
hard. That's
yeah,
hard.
it is very hard. I think we probably need to sign up to Cheeseaholics Anonymous or something. But yeah, it's very tempting. So, Paul, can you maybe start by explaining to our listeners sort of who you are, what your background is, and why you're here today?
Sure. Well, yeah, I've been in France since 2019, so I'm actually a UK chartered accountant, or the Scots out there. I'm an English one, so very sorry. Been here now nearly 6 years. Before that, travelled around Europe, working for multinationals. COVID came, and we went, maybe France is a good place to stay. So now I'm based in Normandy, the west side, with my wife, two cats, five sheets, and a small tax business, which is what I run now day to day.
Right, wow. So, 5 sheets, that must be a lot of work in high season.
It's pretty busy. It's pretty busy. So last year we just finished building our new house. So this year is hopefully just maintaining the sheets and the gardens. So I hope.
Right. Well, that
Hopefully
yeah,
you get through the winter. Yeah, we get through the winter storms, no more walls fall down, which is always the interesting bit.
oh yeah, oh yeah, especially this winter, it's been quite stormy around these parts. Well, that's interesting as well because I know that running sheets is, and the tax implications of running sheets is something that comes up a lot on the Survive France forum. So perhaps
Yeah,
in another episode, we could come and revisit that and have a chat about
sure.
that because I think that would be very, very useful for a lot of people. But this morning, we're talking about UK taxes. And first question is why? Why are we talking about them right now?
Okay, everyone's probably going, why on earth do you talk about UK taxes given the UK tax law runs this crazy period of April to April, whereas the rest of the world is at January to January? And the answer is because you need to think about your UK taxes when you're doing your French taxes. And you're going, why? And the key thing to think about is residence. So this is what we'll talk quite a lot about today, because if you look on the internet forums, there's lots of debate and discussion about this, quite a lot of misinformation. And if you don't get the residence bit right, you don't get anything else right. And again, you can start your UK return in April, same time as you start your French return. Okay, you need to look at slightly different calendar periods, but if you go through the thinking once, you'll get your French return right and you'll get your British return right. That is important because if you get one
Right.
of them wrong, you can end up paying too much or too little tax, and both of those are bad.
Absolutely. Absolutely. So timing is quite key here, I imagine.
Yeah. Timing is quite key. So you should, if you're living over here on a visa, and sorry, I've just got a cat with it to help me. Just move the cat. Let's just say the Vera. Yeah, timing's key. So you should always keep an eye on your residence if you are or here on a visa or on your 9180 days or even carte de séjour. But again, it's something just to keep an eye on all the time. So make sure you don't do anything wrong.
Right. And you mentioned residency, and I know that residency is kind of the key issue where tax returns are involved, but maybe you could explain a bit more about this.
Right, yeah. Residency. This is first thing, residency for tax purposes and residency for your carte de séjour aren't necessarily one and the same thing. So, for example, you can be here on a visitor's visa and resident for tax. In theory, you can also be here with a carte de séjour and not resident for tax, though you should probably ask some questions then. And it's also not obvious. Some people go, well, I've been in one place for 183 days. That's where I'm resident. Yeah, not quite true. That just before we scare everybody and start people running for the hills, if you live in France 350 days a year, you spend 15 days in the UK, you've only got one house you can live in, which is in France, it is generally pretty simple. You're French resident. But beyond that, it's not so simple.
Right. Okay. So when is it less simple?
Right. So again, just put the guidance in here. Don't take this as personal advice. If you've got complexity, go and check. Typical case where it's less obvious is when you have a house in both the UK and France you can use, not necessarily own. It can be someone else's house that you've got a right to live in, and if you're not working. So France is actually a little bit easier than the UK. Residence is based on where you've got your main house, spend the majority of your time. Again, it's often simplified to 183 days. It's not quite that simple. And if your main economic interests are France, for example, you get all your income in France. So that's pretty much saying you're French residents. UK is actually quite complicated and do not just apply 183 days. In an extreme case, and you're going to laugh at this, you could be UK tax resident if you spent 16 days in the UK in a year,
Wow.
which is not a lot. Now that's extreme,
Mm.
but if you've been tax resident in the UK before, you've got some accommodation in the UK, for example, a little flat you can use. You worked 40 days in the UK, say you're doing a side project, and you've spent 90 days in the UK for the past 2 years, or one of the past 2 years, you could be tax resident there from 46 days. So if you're going backwards and forwards, one tip I'd have is keep a log of where you are. And that,
Right.
because that could be quite important. Because if you think about it, then you could, in theory, think you're resident in both countries, which is another question.
Right. So, yeah. So can you be resident in both countries? Presumably not.
No. Again, this is talking UK, France, because the rules UK, other countries are different. So it's very, very
Right.
national. It's not EU. So unless you're actually physically moving house from France to the UK or vice versa in a year, when something called in the UK split year comes in, which is a bit messy, you can have dual citizenship. You can't have dual residency. So if you tick the boxes of being French resident, go poof, French resident, and you tick the boxes for British resident, boop, and British resident, what kicks in is basically a tiebreaker. It's the UK-France tax treaty, which if you're in this situation, have a look at. It's actually not that complicated. And it's got a series of rules and tiebreakers about where you land. So it sort of goes through the list and says, well, okay, you think you're resident in both. Where, first of all, where do you have a permanent home? So if you have a permanent home only in one country, you're resident there. Oof. So if you've got permanent homes in both countries, then you go down to, well, where are your main personal economic interests? So have you spent a lot more time in one country than the other? Have you got more income in one country than the other? It links then into time. And if everything else is very confused, then it looks at nationality. So if you've got only one nationality, that's the ultimate tiebreaker. So, and if it's then really confused, and if you've got dual nationality, you spend equal time in both, equal income in both, you then go and ask the tax authorities to talk to each other and say, where are you resident? So you can't do both. Ultimately, you can go into imports online, send them a message, they talk to HMRC, and they'll come back with an answer. So you can't be in both. Key point here, carte de séjour, and there's a quite interesting debate online on the internet forums, which you should always take with a degree of caution, about, oh yeah, we've got a carte de séjour, you're resident here. Yeah, if you've declared you're going to make your main house in France and got a carte de séjour, you probably should be resident in France.
Yeah.
But if you actually aren't really resident in France, you shouldn't go, well, I need this for immigration, but actually haven't done this, and I'll do my tax declarations all wrong. Don't do that. Go and get some advice from visa people about, well, I've done this. What should I do? But again, that's
Yeah.
another good reason to keep an eye on where you are, what you're doing. Make sure you're complying with your visa. I'm not a visa expert, but like, if you're flying backwards and forwards, if you're doing income in multiple countries, just be a little bit careful. Don't upset the authorities because they don't like
Yep.
being upset.
No, that's very, very good advice. Always ask. I always tell people go along to the tax office and ask the questions.
Yeah,
Even if they don't necessarily know the answer, at least you've shown willing and you're trying to be compliant.
exactly. Trying to be compliant is good. I mean, HMRC are interesting to deal with. We all know that. They're nice people, but hard to get through to. Go along to your French tax office or use this wonderful thing of the imports inbox, send them a message online, and they usually get back to you. If you're asking to save money, yes, they usually say no, but I'd expect that. But if you're wanting to clarify something, they're pretty good. So if in doubt, do it. But just make sure you're getting it right. And again, just
Uh-huh.
keep an eye on what you're doing. It's basic sense to monitor what you're doing.
Yeah, no, definitely. And I think, I suspect slash think slash know that since Brexit and the application of carte de séjours, I think a lot of people have found themselves in this situation where they do have a carte de séjour because they were kind of permanently here prior to that and were entitled to it. And things have changed, and maybe they are now working back in the UK and they are really unsure as to how that impacts on their tax situation.
Exactly. I mean, I think the first thing to do is always get some advice in your carte de séjour. Are you following the rules?
Mm,
Then in parallel, check the tax treatment, make sure you're getting it right. Don't just let one blindly guide the other or guess, because yeah, it's like shopping in the UK in Tesco and Sainsbury's. You can't overpay in Tesco and go into Sainsbury's and say, can I have some free shopping I've overpaid in Tesco? It doesn't work like that.
yeah.
Everybody wants the right amount of money. That's how it works.
No, that's a very good analogy. So presumably then, before people start, excuse me, completing tax returns and putting any numbers in any forms, they should be very, very clear about their residency and where they are filing their returns.
Exactly, exactly. Make sure if you have to do your residency first, otherwise you really don't know what to put in which set of tax returns. It's like deciding you're going to London from Newcastle. Don't set off there without a map or have a clue of the route numbers because you'll get it wrong. So do
Mm,
that first. If you need to, write some notes down, get some advice. But once you've done that, then the numbers slot into place because that then tells you what you put away. Um,
right. Okay.
yes. Now we can get
Uh,
into what you put in the return. But we've got to do this first, otherwise the return's just nonsense.
yeah, no, exactly. So that was my next question. So what should be included in the UK tax return then?
Okay. What should be in the UK tax return? It's the relevant things that go into each area. And I'll talk a little bit about that in a second. First things first, don't make the mistake of going, I'm resident in France. I declare everything in France, or I'm resident in the UK. I'll put everything in the UK because the authorities will know. So I've heard indirectly via my wife, somebody going, oh, well, I live in the UK, but I've got a French Airbnb. I'll declare all my income on Airbnb just in the UK. That's just wrong. And importantly now, the French authorities will know it's wrong because Airbnb tell them. And if anybody is letting out properties through Airbnb and Booking, you'll see what you should have seen in last year's return. Oof, there's some little information. Airbnb this, Booking this. Are you sure you've put in the return? So they know. Um, so you need to clear the right stuff in the right place. First of all, though, again, let's assume a French resident, not UK resident, it keeps things simple. First thing you do is when you leave the UK, tell them you've left. So you can tell them online, or you can tell them through something called Form P85. And if you're doing self-assessment, if you've got a UK property, you've got to also declare it every year there as well. Now, what you put in is effectively set out in the tax treaties. Again, this varies country to country. So we're talking here UK, France. Definitely not USA, France, completely different treaty. So
Yeah.
that's why you don't just read the internet forums. So let's say in France, the whole year resident here, what you declare in a year to tax return is what you earn from the UK. So this is any working. So if you've gone over there, done some short-term workings, you pay tax in the UK first. Property income. So if you moved over here, you're letting out your old house to somebody, that's taxable in the UK. And government pensions. There are others, but they're more common ones. And again, if you're letting out property in the UK, you should be doing a UK tax return. If you're not, bad news, you should be doing one because that's what's expected. But the government pension's a little wrinkle because this is not common sense what a government pension is.
Right. Okay. What is it?
Right, it's not what you think. And again, this is where actually HMRC's website's pretty good. You can go and have a look. A government pension is something like a civil service pension.
Mm-hmm.
Most local government pensions, apart from a few little wrinkles, executive bodies, they're government pensions. What's not a government pension, so not taxable in the UK, an NHS pension paid by capita.
Mm-hmm.
So that's taxable only in France, not the UK. And similarly, UK state pension. Yeah, that sounds like a government pension. No,
Yeah.
it's not under the tax treaty. That's not taxable in the UK. It's taxable here. But if in doubt, you can go online, Google it or whatever. You'll come to a big long page on the HMRC website and you can go and check exactly what is where. Because that's, again, it's logical to assume a state pensions government, but it's not.
Right. Okay. So what is not taxable?
Right. Okay. Good news. So generally, and again, there's a few wrinkles. If you own a company, it's got big shareholdings. Dividends,
Mm-hmm.
interest, aren't declarable taxable in the UK, just in France. Also, you still get a UK personal allowance, which is good.
All right. Okay.
Yes. But again, a little bit of a wrinkle. You need to do your tax return right if you're doing one and do your P85 right, or you could end up paying taxes in the UK on stuff you shouldn't. So again, if you've moved to France, don't just blindly keep doing your tax return in the UK like you used to, because you could be paying a lot more than you need. And again, UK needs lots of money, so does France, but they don't need charitable donations from you. Why do it?
I like that. That's a very good way to look at it. So, okay, that's enlightened me on various things. So, my next question is, can you do a UK tax return online even if you're not a UK tax resident? If you're
Yeah,
not a UK
yeah.
resident, sorry.
You may not like the answer to this question. It's a yes and no. The
Of
answer is
course.
yes, you can do it online. And given how much mail seems to go missing for me between the UK and France and vice versa, I would encourage you to do it online because it gives you proof.
Right.
But there's a wrinkle. If you're a French tax resident and not a
Mm.
UK tax resident, you cannot just use the free software on the HMRC website. You cannot,
Oh, okay.
because there's a critical part of the tax return, technically called the SA 109 pages. It's the non-residence pages. If you don't do them, UK assumes you've gone and become tax resident in the UK again, so it could be a bit of a mess. And HMRC software doesn't let you do that online. You can do it on paper and post it to the UK before the end of October. Let's you do that. But if you need over here, you either have to buy some software or get somebody to do it for you online with the right software to do the return correctly. If you don't, it's technically invalid. Now, will you get a penalty? Good question. Could you get some
Right.
questions? Yes. In theory, HMRC can come back and start asking questions about your worldwide income. They could hit you with penalties because you've deliberately done your tax return wrong. More importantly for you, if you're living over here, aren't doing the SA 109, you're not claiming your UK tax reband, your £12,500, which is a bit daft, really, if you've got UK earnings.
Mm. Right. So, I mean, I guess from listening to that, my advice would probably be use a tax expert who's got access to the correct software. Is that
Yeah. I mean, again, if you're fine with software, there's plenty of good stuff out there will do it for you, or go to somebody who can do it on your behalf. So I would recommend a qualified accountant, but frankly, anybody you trust can do it for you and can submit it on your behalf or help you submit it. So, and then you know it's right.
right? Yeah, no, that's a good
Which then
point.
brings us to an interesting point, depending when the UK when this podcast comes out.
Right. So, next question is, so what do people do if they haven't yet done their UK tax return for 2024-25?
Right. Okay. Basically, do it as soon as possible. So, the deadline is 31st January 2026. So, as we're recording, still got a few days.
Mm.
If you miss the deadline and you've been told you have to do a return or you should have done a return, you get a £100 penalty. Okay, that's life. The watch out then is its penalty starts going up after 90 days. So just do it now. Do it as soon as you can. Don't rush it and put garbage in. Do it as soon as you can.
Right. Okay.
But if
Yeah.
you realize you've done it wrong, there are options.
Oh, yeah. Yeah. Well, that was my next question. What happens when you think or you realize you've got it slightly wrong?
Okay, and this is what HMRC doesn't publicize so much. So in France, there's this is where my French pronunciation looks terrible. The droit d'erreur, so the right of error. So you know about
Droit.
that. That's quite public.
Yes, I do. And droit is one of those words that I cannot pronounce. And every time we're in the car and I say, carry on, go straight ahead, tout droit, I get my kids and my other half shouting at me for my bad pronunciation. I think it's a really difficult. Anyway, we know what we're talking about. You
Anyway,
have the
we know what it
le
is.
droit, l'erreur. You have the right to make a mistake in France.
Yeah, exactly. You've got the right of error. I'll stick to my English. Now, UK doesn't shout about it, but if you've done your return wrong, or you
Mm.
go, oops, I've realized something, or oops, I've forgotten my SA 109, I better do it. You actually have 12 months from the deadline for submission of your return to put it right. So
All right.
you can, yes. So if you do your 2025-26 return wrong, which is due this January, you've got till January 2027 to submit a revised one. And if you're in software, you click the little box amended and put a message in there why you've done it, and you can do so, and HMRC will process. Beyond that, if you realize you've completely messed up your stuff, so for
Mhm.
example, if you've been declaring income in the UK that you shouldn't have done, you can apply for something called overpayment relief, but that's more discretionary. So you get into battles with HMRC and you've got to fill forms in, send letters, prove you've paid the tax. But you've got another 4 years on top from the end of the tax year concerned. So you've got a bit of period to go back. But it's always better to proactively fix things because, yeah, HMRC can charge penalties. If you go to them and go, yep, I've done something wrong, they might penalise you at 0%. If HMRC come to you and go, you've been letting out a house in the UK and you haven't been paying any tax, give us all this information and we'd like the tax, please, and a penalty, it will cost you more money. And you'll be on the radar. Don't be on the radar. So
Yes.
if you realise you've got it wrong, just try and go and fix things. The sooner the better.
Right. Okay. No, that's very good to know. Um, Something that comes up quite a lot actually on the forum is people who have private pensions in the UK and are being taxed on it in the UK and want to know whether they should be or not. So maybe you can answer that one.
Yeah, again, I'll generalize here a little bit, and again, usual caveat, take advice if in doubt. But if it's a private pension, not a government one, generally you should be paying French tax on a private pension including a UK tax-free lump sum. And if you're talking big sums, I would strongly recommend you take some financial advice on this, because you can make some catastrophically expensive mistakes for French tax. But you shouldn't be paying tax in the UK. If it's in payment, you need to fill in what's called a dual taxation form. You can get it on the UK website, take it along to imports, get them stamp it, send it back off the UK, and you can ask that to be paid gross in the UK. HMRC aren't very fast at processing these things, but it's not too painful a process. Just go along to the French tax office. You can also just claim it back on your tax return, but I'd suggest do the form so it's right to start with. And if you still haven't got the money, declare it on your tax return and say, please, I want the money back. The other
Right.
watch out is it's one form per pension, not per person.
Oh,
So if your
okay.
pension changes anyway, you get a new pension. You've got to do one for every single one, because effectively HMRC will go back to the pension provider and say, don't tax. So if you have 10 pensions, lucky people, 10 forms.
Well, if you've got 10 pensions, you could probably afford to pay somebody to deal with it all for you, I would say.
It would be wise. I mean, I know about UK tax. When I was moving my pension around, I went and consulted an expert, and you probably know who it is because you've talked to him about how to do things. Okay, it costs money, but it's money well spent.
Yeah.
And you really, really don't want to just make assumptions about big lump sums. It can be, as I said, I'm not giving financial advice, but go and Google it. You could cost yourself a lot of money for no good reason. So don't do it.
All right, that's very good to know. And so how do UK pensions relate or to your French tax return?
Okay. There's a link, and I've got good news and I've got bad news. So
Oh, it's always the
let
way.
me do the bad news. I'll do the bad news first for once. The bad news is what's taxable in one country and not taxable in the other isn't necessarily the same. And again, I
Mm,
think most people will know that. You've got the leverage A and the LDDs here. Big watch here is ISAs. ISAs in the UK are all nice and tax sheltered, blah, 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 blah. If you're French tax resident, forget it. You pay tax on an ISA just as if you held the shares directly. And don't forget to declare it, because the tax authorities will probably know, because behind the scenes they exchange information. And again, interest in UK bank accounts. Taxable here. You fill in the form in your French tax return with the list of all your bank accounts in. If you've got the data, just make sure you declare it. So that's the bad
mm.
news. Good news is actually property. And this is something I was dealing with recently for somebody. So go back to UK property. It's taxed first in the UK. So
Hmm.
you'll declare it in the UK. And again, maybe the rental is within your UK annual allowance, so you don't pay any tax. You've got to declare it, but you don't pay tax. Tick. You then have to put the income on your French tax return, but as foreign taxed income, because the tax net is just 0%. France will then put all your income into a big cake, and then they'll give you relief on the UK tax that you didn't actually pay. So you might find out that doing it properly means you pay less tax overall. That can particularly be the case if you've got a couple, one of you has a UK pension, state pension, for example, which you shouldn't be declaring here. They own the property, and then you put everything together, and under France, you don't pay very much. The UK, you don't pay anything. It can work out quite nicely rather than doing it wrong and paying some tax in the UK that you don't need to start with. So certainly if you've got property, make sure you're doing it right. You might actually get a pleasant surprise. One of my clients did recently, and they went, "Oh, that's quite a lot of money." I went, "Yeah, it's quite a lot of money." So do look at that. It's you need to get things right, and it can be in your interests.
All right, that's good. And actually, excuse me. Excuse me. You gave me my takeaway point for today, which I'll come back to in a minute. And I know there's lots more that we could be talking about, but I think that's almost probably enough for today, because I know that tax is a subject that, it is quite difficult for people to get their heads around and absorb the information. So I think we've covered some stuff today. Maybe you could summarize what we've gone over today in kind of 3 bullet points.
Yeah, exactly. There's always too much in UK tax. It's very complex. But if I was going to call out three things to remember, number one, make sure you clear where you're resident, because without that, you get it wrong. Number two, if you're French resident, um, you need to declare your worldwide income. But for the UK, you need to declare just your UK relevant income and use software or do the forms nice and early. And point three, if you realize you've got something wrong in the past, you can go back and fix it. So if you want to remember three things, they're the three. And tax isn't as taxing as you think. It's complicated, but often if you just work through it in a logical way, it's not too scary at all. So don't be scared.
All right, that's very good. And my takeaway from this episode is something that you said a couple of minutes back, which is do it properly and you might be paying less tax overall. And I think that's a very good mantra for everybody to remember. Do it properly, and not only will you might be paying less tax, you're also going to avoid a lot of potential headaches, stress, fines, and investigation by either HMRC or the Centre des Impôts. So neither of which you want going through your bits and
Exactly.
bobs, I would say. All right. Well, thank you.
Exactly.
Thank you very much for joining us today, Paul. I know it will be very, very useful for a lot of people. What's the best way for people to get in touch with you after the show if they want to?
Yeah, sure. You'll put my contact details online. I'm happy to have a quick chat with anybody and take it from there. And if we need to come back and close out a few more points in the future, happy to do that too. So, a pleasure to chat to you this morning.
All right, great stuff. Okay, everybody, I will put Paul's contact details in the show notes and then you can get in touch direct and hopefully he will sort out everybody's tax affairs and make things seamless and stressless. Seamless and stressless is the mantra for this week, I think. Thank you all very much for listening. Thank you, as always, to our sponsors, Fab French Insurance, who will make your life as simple as Frenchly possible. And that's really what we're trying to do here, is to make life as simple and enjoyable as possible. Thank you for listening and see you next time. Bye-bye.
Bye.